China has witnessed an acceleration in the opening up of its financial sector in the past 2 years. In Shanghai, the country's financial hub, foreign invested institutions now make up 30% of all financial firms. Some have set up wholly owned subsidiaries.
We are very hopeful the government will allow us or give us the opportunity to be more engaged, and as such, a broader license which will allow us to participate in more businesses and get engaged with a wider base of investors will be, of course, most welcome.
This April, further reforms have come to the securities sector, with the regulator CSRC releasing a new guideline that allows foreign companies to hold controlling stakes in their securities joint ventures in China. Experts say foreign firms do have certain advantages in the industry.
Many Chinese firms, state-owned or private-owned, are doing global acquisitions and investment. This includes going to places like Hong Kong, Singapore, Tokyo, of course Europe and the US. So whenever the Chinese firms going abroad, including going to Hong Kong, then these international security firms will have a clear advantage.
But for now, these foreign firms still account for a small market share. As their capacity increase and operations expand under the new measures, Professor Qian said their biggest challenge remains localization.
One important aspect is actually corporate governance. More specifically, whether the headquarters of these global institutions, whether the headquarters delegates the important tasks to the Chinese subsidiary or the Chinese firm.
That's because their Chinese teams are dealing with a different business and regulatory environment than in other global markets. Experts say the challenges for foreign securities companies now also reflect current issues in China's ongoing financial reform.
Someday, when the Chinese market is fully integrated into global markets, maybe you don't need to localize that much. But right now, you still need it very much. The most important thing for the regulators, to me, is still to reform the Chinese IPO mechanism, a system where you move from a very administrative process to a process where it's more registration-based and it's more market-based.
Firms like UBS and Societe Generale have already submitted their applications to increase holdings. Experts say domestic securities firms should prepare for a more competitive industry. Yang Chengxi, CGTN, Shanghai.